Greetings fellow traders. Today I'm going to unveil the secret weapon that has propelled me to greater profits, the pivot point indicator. In this video, we will uncover the following. Number 1. The fundamental concept of pivot points and their significance. 2. The method of calculating pivot points. 3. The diverse types of pivot points and my personal favorite. 4. Incorporating pivot points into your trading strategy. And 5. Limitations of pivot points. Feel free to pause the video or jump to the sections that align with your interests. If you're new to Trading Intel, be sure to hit that subscribe button as we bring you the latest and greatest in trading knowledge and techniques. Without further ado, let's begin. So, what exactly is a pivot point? It's a technical analysis indicator or set of calculations used to discern the overall market trend across different timeframes. The pivot point itself is simply the average of the intraday high and low along with the closing price from the previous trading day. It serves as a foundation for the indicator, but it also includes other support and resistance levels that are calculated based on the pivot point using mathematical formulas. But what do all these pivot points tell us? Well, on any given day, trading above the pivot point suggests bullish sentiment, while trading below the pivot point indicates bearish sentiment. The pivot point acts like a magnetic force, pulling price towards it. In fact, on any given day, the price has a 70% chance of hitting the pivot point, giving you better odds than a coin flip. Additionally, the other levels assist traders in identifying potential areas of support or resistance. And when price moves through these levels, it indicates the direction of the trend. Let's dive into the calculation of pivot points. Pivot points are determined using the previous day's high, low, and closing prices. The formula is as follows. From this pivot point, we can calculate the first and second levels of resistance and support using the following equations. TradingView offers an inbuilt pivot point indicator that will do all these calculations for you and plot them on your charts, saving you the time and effort. By default, the traditional pivot point is selected, but let's dive into the different types of pivot points and examine their similarities and differences. Classic pivot points are similar to the traditional pivot point calculation, but differ in their calculations for the third level and beyond. Woody pivot points, developed by Ken Wood, who was a trader and a technical analysis, gives more weight to the closing price. DeMark pivot points, developed by Tom DeMark, who was another trader, differ in their calculation of resistance and support levels, and they give more weight to the range of the previous period's prices. Fibonacci pivot points, on the other hand, incorporate Fibonacci ratios to identify potential levels of support and resistance in the market. Last but not least are the Camarilla pivot points, designed to be more sensitive to short-term price movements, which are my personal favorite for day trading. Now let's observe how the Camarilla pivot points work and how to incorporate them into your trading strategy. Begin by isolating the pivot line and closely scrutinizing its trajectory. Is it climbing, descending, or remaining static? This is crucial as it provides insight into the market's overall direction. If the pivot points are ascending, it suggests that the average price is on the rise, indicating an uptrend. Conversely, a downward trend is indicated if the pivot points are plummeting. If the pivot points are fluctuating within a narrow range, it implies that the market is consolidating before making its next big move. Next, examine the distance between the pivot points. Is it expanding or contracting? This will provide insight into the strength of the current trend. When the distance between pivot points widen, it suggests that the trend is gaining momentum. Conversely, a decrease in the distance between pivot points suggests that the trend is losing steam. However, this does not necessarily imply a reversal, as it could simply indicate a period of consolidation before the next move. Now, let's bring in the other lines and note how they can aid in your analysis. The Camarilla pivot points are particularly sensitive to short-term price movements, so instead of relying on them for precise entry and exit points, it is more effective to group multiple support and resistance lines into zones. I typically combine R1 to R3 as my zone of resistance and S1 to S3 as my zone of support for the day. When price reaches these zones for the first time, I consider trades in the opposite direction. However, if the price is showing extreme bullish or bearish pressure and breaks through either zone convincingly, I will look to enter trades in the direction of the next pivot point. Keep in mind that around 85% of the time, the price will remain within R5 and S5 for the day, which mark the extreme ends of the pivot range. However, unexpected events such as news releases can cause price to extend beyond these levels. Okay, so far we have discussed trading these levels on a daily time frame. However, you can apply the same concepts to higher time frames and you will be surprised at how powerful this indicator is. Let's take a look at some examples. So now you may be thinking that this is an excellent indicator, but let's go through some limitations of pivot points. It's important to acknowledge that utilizing pivot points on a chart does not guarantee that the price will halt, reverse, or even reach the designated levels. These levels are determined by analyzing past price action and merely offer a prediction of where the price may head. At times, the price may fluctuate back and forth through a specific level, resulting in you being stopped out as the market seeks liquidity. As with all indicators, it is vital to incorporate pivot points as part of a comprehensive trading strategy, rather than solely relying on them. I hope that you've found this video informative and have gained a deeper understanding of the pivot points indicator. To enhance your analysis, consider incorporating the Monday's trading range, which I've recently covered in a separate video, and you can watch this here. If you found value in this video, please show your support by liking and subscribing. Thank you for taking the time to watch until the end. Until next time.